In the modern world, cannabis is framed as a moral debate. Legal or illegal. Medicine or vice. Freedom or danger. But history rarely cares about morality. History cares about structure. Because before cannabis became a social question, it was an economic instrument. And before it was criminalized, it was carefully integrated into the machinery of empire. This is not the story of a plant. It is the story of how power learns to design markets, and how something organic becomes regulated capital. At its peak, hemp-based industries powered global trade. Ropes, sails, textiles, paper. Taxable goods essential to navigation, warfare, and administration. Empires did not expand on ideology alone. They expanded on logistics. And cannabis in its industrial and psychoactive forms sat quietly at the center of that logistical web. Not as a drug, but as infrastructure. Today, cannabis represents a global market worth hundreds of billions. Legal markets, illicit markets, financial instruments, licensing regimes, regulatory bottlenecks. But this market did not emerge. It was designed. And like all design systems, it follows incentives, not ethics. To understand cannabis, you must stop asking, is it good or bad? And start asking a more dangerous question. Who benefited from its integration? And who benefited from its suppression? Because prohibition was never a failure of policy. It was a phase. A reconfiguration of ownership. A restructuring of supply chains. A redirection of capital flows. And when those flows stabilized, legalization followed. Not as liberation, but as consolidation. This is the recurring pattern of financial history. First, integration. Then, restriction. Then, scarcity. Then, premium pricing. Then, regulation. Then, capture. The plant never changed. The owners of the market did. In ancient civilizations, cannabis moved freely. Across trade routes. Across borders. Across empires. In China, hemp was agricultural infrastructure. In India, cannabis sat inside religious and medicinal economies. In the Islamic world, it traveled alongside spices, textiles, and knowledge. It was not hidden. It was accounted for, measured, taxed, moved. Empires tolerated cannabis not because they were enlightened, but because it served production. A workforce that could endure longer hours. Materials that supported naval dominance. Commodities that could be standardized and controlled. Cannabis was useful. And usefulness is the highest moral category in empire building. But usefulness is conditional. The moment a commodity threatens control, its classification changes. What was once infrastructure becomes instability. What was once tolerated becomes regulated. What was once regulated becomes criminalized. Not because the plant changed, but because the economic environment did. As industrial capitalism matured, new priorities emerged. Standardization, predictability, labor discipline. Cannabis, particularly its psychoactive form, did not disappear. But it stopped fitting neatly into the emerging factory model. And systems do not eliminate what they cannot control. They relabel it. This is where the story turns. Not toward morality, but toward power design. Because prohibition was not born from chaos. It was born from administrative logic. To control labor, you must control consumption. To control consumption, you must control legality. And to control legality, you must control narratives. Cannabis became a problem only after it became unwound by the right interests. And that is when history always intervenes. Look closely, and you will see the familiar architecture. A widely used commodity. Competing industrial interests. Regulatory asymmetry. Media amplification. Legal restriction. Black market expansion. Financial consolidation. Eventual re-legalization under corporate control. This is not unique to cannabis. It is the same pattern seen in alcohol, in opiates, in currency, in debt, and later, in digital assets. Cannabis is simply a clean case study. A plant with no ideology, inserted into systems that had nothing but ideology. This documentary does not ask you to support legalization. It does not ask you to oppose prohibition. It asks something far more uncomfortable. To observe how markets are engineered, how legality follows capital, and how empires do not ban commodities. They redesign ownership. Because the real question is not why cannabis was banned. The real question is why it was allowed first, and what that tells us about who designs markets today. In the next chapter, we go back to the origin. Before laws, before stigma, before prohibition, to the ancient trade routes, where cannabis was not a controversy, but a line item. And once you see how empires priced a plant, you will never look at modern regulation the same way again. Was cannabis ever illegal? Or was it simply waiting for the right owners? When cannabis was infrastructure, long before cannabis became a legal category, it was an economic constant. Not controversial, not political, not moralized, simply useful. And in financial history, usefulness determines survival. The earliest records of cannabis do not appear in court documents. They appear in agricultural ledgers. In ancient China, hemp was not a drug. It was a material input. Fiber for clothing, rope for construction, paper for administration. The Chinese state did not debate cannabis. It counted it, measured acreage, harvest yield, labor allocation. Cannabis was embedded into the state's productive capacity. This distinction matters, because what is embedded into production is protected by power, at least temporarily. In India, cannabis followed a different but equally revealing path. Here, it entered the economy through ritual and medicine. Bang ganja. But ritual does not mean marginal. Religious economies are still economies. They require supply chains, seasonal labor, pricing norms, distribution networks. Cannabis was not free-flowing chaos. It was organized consumption. And organized consumption is easy to tax. The state did not suppress cannabis. It absorbed it, just as it absorbed salt, spices, alcohol. Cannabis became part of the fiscal environment. Across the Islamic world, cannabis moved quietly alongside trade, along the Silk Road, through Persian markets, across North Africa, not as contraband, but as cargo. It traveled with textiles, resins, oils, and knowledge. And like all traded goods, it followed 3 rules. It moved where demand existed. It adjusted to local regulation. It survived as long as it remained profitable. No empire banned cannabis at this stage, because no empire feared it. Empires fear only 2 things: loss of revenue, loss of control. Cannabis threatened neither. Yet, hemp, in particular, became strategically important. Naval empires required ropes, sails, rigging. Without hemp, ships do not move. Without ships, empires collapse. This made cannabis-derived products non-negotiable. States encouraged cultivation, standardized production, ensured supply. Cannabis was not tolerated. It was subsidized. This is the forgotten phase of the cannabis economy. The phase where it was not cultural. It was logistical. Notice the pattern forming. Cannabis thrived when it supported infrastructure, enhanced productivity, integrated cleanly into taxation. It remained untouched by moral scrutiny, because morality enters markets only when ownership becomes contested. For centuries, cannabis existed in what economists would call a low-friction regulatory environment. No prohibition, minimal enforcement, localized norms. It was managed, not feared. So what changed? Not the plant, the system. As empires expanded, Their economies shifted from agrarian to mercantile, from mercantile to industrial. And industrial systems demand something different. They demand standardization. Cannabis resisted standardization. Its effects varied. Its cultivation decentralized. Its consumption patterns were informal. This did not matter in agricultural societies, but it mattered deeply in factory economies. Factories require punctuality, uniform output, predictable labor. Cannabis did not break productivity, but it introduced variability, and variability is poison to industrial planning. Still, at this stage, cannabis was not banned. It was simply watched, monitored, reclassified. This is where economic history becomes political economy. Because when states observe a commodity long enough, they begin to ask a dangerous question: who controls it? Cannabis was grown by peasants, traded by merchants, consumed across classes, but it was not owned by industrial capital. That made it unusual, and in systems built on ownership concentration, what cannot be owned eventually becomes regulated. The ancient world did not suppress cannabis because it had no reason to. It generated value without challenging hierarchy. But modern systems would not be so indifferent. As empires approached the industrial age, they began redefining acceptable consumption, not based on health, not based on culture, but based on economic alignment. Cannabis was tolerated as long as it served production. The moment production changed, this is not a story of ancient wisdom lost. It is a story of structural transition, and transitions always leave something behind. In the next chapter, we enter the age of empire, where cannabis collides with industrial capital, labor discipline, and administrative control. Where tolerance ends, so did its status. Not with outrage, but with paperwork. And once the state begins writing rules, markets stop being organic. They become engineered. When control became more valuable than revenue, empires do not collapse because they lack resources. They collapse when they lose discipline. By the 19th century, discipline had become the central currency of power. Not gold, not land, but labor control. Industrial empires did not simply extract materials. They extracted time, hours, schedules, output quotas, and anything that interfered with time discipline became a problem regardless of profitability. Cannabis had once supported empire. Now it complicated it. Not because it destroyed productivity, but because it resisted uniformity. Factories required workers who arrived on time, worked at the same pace, and responded predictably to command. Cannabis introduced variability, and variability cannot be scaled. This is where the economic logic shifts. Cannabis did not disappear from markets. It disappeared from approval. The British Empire offers a clean illustration. In India, cannabis had been integrated for centuries. Taxed, regulated locally, normalized. But British administrators viewed it differently. Not as culture, not as ritual, but as a variable they did not control. Colonial economies were experiments in optimization. Maximize output, minimize resistance, standardize labor. Anything that existed outside bureaucratic oversight became suspicious. The issue was not intoxication. Alcohol intoxicated workers too. The issue was ownership. Alcohol production could be centralized, licensed, monopolized. Cannabis could not. At least, not yet. So the narrative began to change. Reports were commissioned. Committees were formed. Language shifted. What had once been described as customary was reframed as disruptive. Not illegal, not immoral, but undesirable. This is the pre-prohibition phase. The moment when states stop asking how to tax something and start asking how to contain it. Economic historians often miss this step. They jump directly to bans, to laws, to enforcement, but suppression begins earlier. It begins in classification. Cannabis was slowly removed from the category of infrastructure and placed into the category of risk. A subtle move, but a decisive one. As industrial capitalism matured, empires invested heavily in chemical standardization, measured dosages, predictable effects, centralized manufacturing. Synthetic stimulants fit this model perfectly. Cannabis did not. This created competition, not between substances, but between economic architectures. Decentralized cultivation versus centralized production. Local norms versus global supply chains. Empires did not ban cannabis because it harmed workers. They sidelined it because it could not be easily owned. By the early 20th century, this logic hardened. Colonial administrations no longer needed cannabis revenue. They needed labor obedience. And obedience does not tolerate ambiguity. So suppression accelerated. Not everywhere. Not all at once. But systematically. Licensing tightened. Taxes increased. Distribution restricted. Until participation became risky. Cannabis markets did not vanish. They migrated from visible commerce to informal exchange, from taxable flows to shadow circulation. This is the paradox. The more empires attempted to control cannabis, the less control they actually had. But control was no longer the point. Reclassification was. Once cannabis was labeled deviant, it no longer needed to be managed efficiently. It needed to be contained symbolically. This freed the state from economic responsibility. Revenue loss could be ignored. Labor discipline could not. This is how suppression becomes rational. Not because it works, but because it aligns with the priorities of power. By the time formal prohibition arrived, the groundwork was already complete. Markets had been displaced. Consumers had been stigmatized. Ownership had been disrupted. Cannabis was no longer an economic input. It was an administrative problem. And once a commodity becomes a problem, it becomes an opportunity. For enforcement. For bureaucracy. For selective redistribution. In the next chapter, we move from empire to republic. From colonial management to federal design, where cannabis is no longer merely suppressed, but transformed into a tool of market engineering. Because prohibition is never about stopping demand. It is about deciding who is allowed to supply it. When laws replaced logistics, prohibition is often described as a moral failure. In reality, it was an administrative success. Because prohibition does not eliminate markets, it reassigns them. By the early 20th century, cannabis was no longer useful to empire. But it was not yet profitable to industry. This created a vacuum. And vacuums in political economy are never left unfilled. The United States did not inherit cannabis prohibition. It engineered it. Not suddenly. Not irrationally. But step by step. First came redefinition. Cannabis was no longer hemp. No longer fiber. No longer medicine. It was renamed. And renaming is power. Once renamed, cannabis could be separated from its economic history. No longer infrastructure. No longer trade good. Now, it was a social risk. And social risks justify intervention. But intervention requires justification. So narratives were built. Media amplification. Selective data. Political symbolism. Not to convince everyone. Just enough people. Here is the key misunderstanding. Prohibition was not about stopping use. It was about breaking continuity. Breaking the link between producer and consumer, tradition and legitimacy, informal markets and formal capital. Once continuity is broken, ownership can be redefined. Cannabis prohibition did not destroy demand. Demand remains stable. Predictably so. What changed was who could supply it without punishment. This is market design. When legal risk is introduced, small participants exit. Large organizations adapt. Criminal syndicates scale. Enforcement does not reduce volume. It raises barriers to entry. Prohibition transformed cannabis from a distributed commodity into a high-risk, high-margin asset. And high margins attract capital. Not moral capital. Organized capital. At this point, cannabis entered the shadow economy. Not because it wanted to, but because the system pushed it there. Shadow markets are not accidents. They are regulated outcomes. They emerge when demand is stable, supply is restricted, and enforcement creates scarcity premiums. The state understood this, which is why enforcement focused on visibility, not elimination. Symbolic arrests, public campaigns, selective prosecution. Enough pressure to maintain stigma, not enough to collapse the market. Meanwhile, bureaucracies expanded. Budgets grew. Agencies multiplied. Jurisdictions overlapped. Cannabis prohibition became a permanent institution. And institutions do not exist to solve problems. They exist to sustain themselves. By mid-century, prohibition had achieved its real objective. Cannabis was fully detached from its historical role. It no longer belonged to farmers, or traders, or communities. It belonged to the system. But systems evolve. And once prohibition stabilized the shadow market, a new question emerged. Not whether cannabis should be legal, but who would benefit if it were. Because prohibition had done its work. It had centralized risk, concentrated supply, filtered participants. The market was now ready. For the next phase, legalization would not be a reversal. It would be an upgrade. In the next chapter, we follow cannabis into the shadows, where capital learns to operate without banks, where enforcement creates economies of scale, and where informal finance begins to mirror formal systems. Because once a market survives prohibition, it becomes resilient to anything. How prohibition taught capital to move without banks. When cannabis entered the shadow economy, it did not become chaotic. It became efficient. Because markets do not disappear when pushed underground. They adapt. The shadow cannabis market did not resemble street crime. It resembled enterprise. Supply chains were reorganized. Risk was priced in. Logistics optimized. Losses amortized. What disappeared was legality. What emerged was financial innovation. Without access to banks, capital learned to circulate differently. Cash-heavy operations, layered intermediaries, cross-border arbitrage. Informal finance did not replace formal finance. It mirrored it. This is the great misconception. The shadow economy is not primitive. It is compressed capitalism. The same incentives, the same hierarchies, the same concentration of power, just faster. Prohibition filtered participants. Only those who could absorb risk survived. Small growers exited. Casual distributors vanished. Scale became protection. And protection required organization. This is how cannabis markets consolidated. Not through mergers. Through enforcement pressure. Cartel structures did not emerge because cannabis was illegal. They emerged because illegality rewarded scale. Large organizations could bribe more effectively, diversify routes, absorb losses, enforce contracts privately. Prohibition created a financial moat. And moats attract capital. Cannabis profits were no longer reinvested locally. They were laundered, not just to hide, but to re-enter formal systems. Real estate, front businesses, trade-based laundering. Shadow capital does not seek isolation. It seeks integration. This is where cannabis intersects with financial history. Because informal markets do not exist outside the global economy. They are embedded within it. Banks publicly rejected cannabis money. Privately, the system adapted. Correspondent banking. Offshore structures. Regulatory blind spots. Illegality increased transaction costs. It did not prevent circulation. The result was predictable. Cannabis markets matured faster than legal ones. They learned pricing discipline, risk management, vertical integration, while legal markets were still debating morality. By the time policymakers began discussing legalization, the market had already solved its hardest problems: production, distribution, demand stability. What remained unsolved was ownership legitimacy. This is the critical transition point. Once a shadow market becomes stable, the next phase is not suppression. It is absorption. Legalization does not dismantle shadow markets. It selectively replaces them. Licenses are not invitations. They are filters. Who qualifies for legalization? Not those who built the market, but those who can navigate regulation, access capital, comply with bureaucracy. This is not reform. It is capital migration. Ownership shifts from informal operators to formal entities, from distributed networks to corporate structures. Shadow capital does not disappear. It adapts again. Some flows enter legal markets. Others move to adjacent products or different jurisdictions. This is the repeating pattern. Prohibition creates concentration. Concentration invites regulation. Regulation enables capture. Cannabis was never a victim of the system. It was a training ground for enforcement, for shadow finance, for market redesign. And once the system learned these lessons, it applied them elsewhere. Drugs, finance, technology, anywhere demand is stable and control is contested. In the final chapter, we return to the present, where cannabis is legal again, not as a plant, but as a financial asset, and we ask the only question that matters: who owns the market now, and what does that tell us about the next cycle? When the market returns, but ownership does not. When cannabis returned to legality, many called it progress. But history does not recognize progress. It recognizes cycles. Legalization did not restore the original market. It replaced it. The farmers did not return. The informal networks were not legitimized. The communities that sustained the market were not compensated. Instead, a new layer appeared: corporate ownership, financial instruments, regulatory capital. Cannabis re-entered the economy, not as a plant, but as an asset class. Licenses became scarce. Compliance became expensive. Scale became mandatory. What prohibition had concentrated, legalization locked in. This is the illusion. Legalization feels like liberation, because visibility returns. Stores open, brands emerge, advertising normalizes consumption. But visibility is not ownership. The real shift happened quietly. Private equity entered, institutional capital followed. Public markets waited. Cannabis was no longer evaluated by culture. It was evaluated by cash flow. This is when a commodity's value is no longer derived from use, but from projected earnings, risk premiums, and regulatory positioning. The plant did not change. The language around it did. Cannabis became a growth story, a speculative narrative, a future market, and future markets are always priced in advance. But financial history teaches us something uncomfortable. When markets are legalized after long prohibition, the greatest profits are rarely made by consumers or producers. They are made by intermediaries, compliance consultants, licensing specialists, investment vehicles, legal frameworks. Those who understand the system do not participate in the market. They own the access to it. This is not unique to cannabis. We have seen it before. Alcohol, gambling, telecommunications, energy. First, informal adoption. Then, restriction. Then, scarcity. Then, legalization. Then, consolidation. And the most powerful designs are the ones that look like accidents. This documentary did not ask whether cannabis should be legal. It asked something more important. What does its journey reveal about how power structures markets and how they always have? Because once you see how empires priced a plant, you start recognizing the same logic in every modern asset. And when the next commodity enters its prohibition phase, you will know exactly what comes next. Ownership does not disappear, it just changes hands. And history never forgets who designed the transfer. Cannabis followed the same architecture. Because systems reuse what works. Today, cannabis is legal in many jurisdictions, yet the shadow market persists. Not because legalization failed, but because legalization was selective. Formal markets serve capital. Shadow markets serve demand. As long as those two remain misaligned, both will exist. This is the final misunderstanding. Legalization does not end the cycle. It completes one phase. The system is already moving forward toward derivatives, futures exposure, cross-border arbitrage, pharmaceutical standardization. Cannabis is being abstracted, detached from soil, detached from culture, converted into financial exposure. This is the end point of the cycle, when the commodity disappears, and only the instrument remains. At this stage, the debate becomes irrelevant. Legal or illegal no longer matters. What matters is who controls the architecture. Cannabis was never the point. It was a case study. A demonstration of how empires integrate commodities, suppress decentralized ownership, create scarcity, reintroduce legality under controlled terms. Once you recognize the pattern, you begin to see it everywhere. In housing, in energy, in digital assets, in data. History does not repeat itself perfectly, but systems do. Cannabis shows us something simple and uncomfortable. Markets are not free. They are designed. History never argues. It reveals patterns. If this story changed how you see markets, then you are already thinking like a financial historian. More structures, more cycles, more systems hidden in plain sight. This is Shadow Financial Historia.